Hi everyone, welcome to today's video. So on this video, I'm going to do a deep dive on NTPC. More specifically, I will discuss whether this is the right time to buy or because of its high price, it's a stock you need to avoid. So this is the simple narrative and people have taken up polar opposite viewpoints. You see, NTPC stock has been on an absolute tear, hitting new 52-week highs. But there's a problem. As of mid-March 2026, the stock is trading near 384 rupees. But some valuation models are suggesting its real, intrinsic value is closer to 267 rupees. That's a potential overvaluation of more than 40%. So what's really happening, right? Is NTPC an overvalued giant ready to fall? Or is this premium price just the cost to own a piece of India's energy future? So which version should you test? Because this is a good way of making money right now if you pick that right macro bet. Should you or should you not be taking this bid? This is the precise answer I will give. A simple request is that please don't watch half of this video. Watch it till the very end. Number 1 point. For those who are new to this talk, you should know that NTPC isn't just another company. It's a Maharatna public sector undertaking, basically India's largest power generator. With a market cap over 3,72,000 crore rupees, it's the leader in the power sector. You can think of it as the backbone of India's growth. The electricity that powers our homes and our factories is in large part thanks to NTPC. Its business is mainly generating and selling power to state utilities. For decades, this has been a stable, predictable business, mostly using coal. But as we'll see, the company is at a major turning point. This is a key distinction that people don't get. Okay, so now let us start talking a little bit from a stock investing lens. Let's get straight to the heart of the conflict. The current market price of around 384 rupees is making a lot of investors nervous. When a stock trades this much higher than its fair value, it's a warning sign. Some models, looking at metrics like EV to EBITDA, suggest a fair price is around 267 rupees. Another one, based on cash flow, puts it around 305 rupees. The consensus is clear. On paper, NTPC looks expensive. This creates a dilemma. Do you trust the hard numbers from the models that scream overvalued? Or do you believe the market, which is willing to pay a premium? The market is often forward-looking, right? It prices a company not on what it is today, but what it could become. So, to find our answer, we have to dig deeper into the bull case for NTPC. So why are investors so bullish despite the high price tag? It boils down to 3 key pillars: solid financials, a great dividend record, and a powerful story for future growth. First, financial strength. NTPC is a giant with a market cap of about 3.72 trillion rupees. It's the biggest player and its financial scorecard is rated as good. It has a history of delivering steady returns. The second pillar, and for many PSU investors the most important one, is dividends. NTPC has a long history of rewarding shareholders. With a current dividend yield around 2.2% to 2.3%, it provides a steady income. This is very attractive for long-term investors looking for regular income from their portfolio. In FY 2025, they declared a total dividend of 8.35 rupees per share, which shows their commitment. But the real excitement, the story driving this premium valuation, is future growth. First, the obvious driver is India itself. As our economy grows, our demand for power will only go up. NTPC is perfectly positioned for this. More importantly, what is happening is that NTPC is making a massive pivot towards green energy. The company has a target to install 60 gigawatts of renewable energy by 2032. This isn't just a plan on paper, it's happening. Its subsidiary NTPC Green Energy is actively building large-scale solar projects. The company announced a massive 7 lakh crore investment plan to revise its total capacity target to 149 gigawatts by 2032. This is a powerful narrative that attracts new investors. When you combine its stable financials, consistent dividends, and this transformative growth story, you begin to understand why the market might be looking past the current valuation. Now, a balanced analysis means we have to look at the other side. No investment is without risk, and it would be irresponsible to ignore the concerns.
The most glaring risk, as we've established, is the valuation. Paying a 40+% premium is a risky proposition. This is a fact. If market sentiment changes or the company fails to deliver, the stock price could see a significant correction. The stock is currently rated as expensive on a price scorecard, which is a clear warning. The second concern is its growth rate. The long-term story is good, but the recent numbers show a slowdown. Sales growth has been sluggish. The company's return on equity is at a moderate 12%. This suggests that while it's a stable giant, it may not be the most efficient growth machine. Finally, as a PSU in a regulated industry, NTPC is always subject to policy risks. Changes in government regulations or power tariffs can directly impact its profits. A slowdown in power demand or delays in its renewable projects are key risks that could derail the growth story. These factors are the bear case, and they are the reason why you must be cautious. Now let's take a quick look at the technicals. Currently, the technical momentum for NTPC is bullish. The stock is trading above its key moving averages, which is a positive sign. However, some indicators are also flashing caution. The stock recently hit new 52-week highs around 392-394 mark and is now facing some resistance. Key support levels to watch are around 383 and then lower at 368. What does this tell us? The charts confirm the strong rally, but they also suggest the stock might be in an overbought zone. For a long-term investor, this doesn't scream sell, but it does whisper be patient. These support levels could present more attractive entry points during a market dip.
So, when we have a conflicting picture, what are the experts saying? In the case of NTPC, the consensus is overwhelmingly positive. Based on ratings from over 20 analysts, the stock holds a strong buy consensus. Out of 24 analysts, 21 have given it either a strong buy or buy rating. This indicates a high degree of confidence from market professionals. Their price targets tell a similar story. The average 12-month target is around 412 to 421 rupees. Some are even more bullish, with targets as high as 445 rupees. This strong institutional backing provides a powerful counter-argument to the valuation concerns. It suggests major players believe NTPC's future growth will justify its current price. So after this deep dive, we circle back to our original question. Is this the right time to buy NTPC? The answer, as is often the case, depends entirely on what kind of investor you are. Let's summarize. We have the bull case, a fundamentally strong company, a sector leader, a reliable dividend payer, and leading India's renewable energy push with strong analyst backing. Then we have the bear case, the stock is by most metrics significantly overvalued, with average recent growth and regulatory risks. So here is the final verdict broken down for different investors. For the short-term trader or a pure value investor, NTPC is likely an avoid or a hold right now. The risk of a price correction is very real, and there are probably better opportunities elsewhere. For the dividend-focused investor, NTPC remains a very strong candidate. The company's commitment to paying a healthy dividend is unlikely to change. And finally, for the long-term investor who believes in the India growth story, the verdict is a buy on dips. Chasing the stock at its all-time high is not a prudent strategy. However, the long-term vision, 149 GW capacity with 60 GW and renewables by 2032, is incredibly powerful. The smart approach would be to wait for market corrections and use the support levels we discussed, maybe around 380 rupees or lower, to slowly accumulate the stock. For you, the current price is not a deal breaker, but a signal to be patient. That's my detailed breakdown of NTPC. It's a classic conflict between present valuation and future potential. Now, I want to hear from you. What are your thoughts on NTPC? Do you think the premium is justified, or are you waiting? Let me know your strategy in the comments below. And if you found this deep dive analysis helpful, do press the like button and make sure you subscribe to the channel for more in-depth stock analysis. I'll see you soon.